Namaskaram. Respected Chairman in absentia, C.H. Namasan sir. Respected Secretary of SIRC of ICAI, Gelly sir in absentia. I welcome all the members who are participating in the series of accounting standards, which has been organized by our SIRC. I welcome all the members who are all participating in this, and namaskaram to all of you. And I greatly, friendly welcome Sri R.S. Balaji. Namaskaram, sir.
Namaste,
sir. We should thank you for all your supports, what you are giving to our SIRC, not only for this programs, but also behind the scene, you are supporting us on organizing the programs. I thank you for all that. I also thank our office team who are coordinating these programs, both CPE and the technical persons. And today's program is specific compliance on SA 230, 240, 501, 505, 570, and 580. This is the program, and Sri R.S. Balaji is a person, today's speaker. And we all know Sri R.S. Balaji, a very lively and lovely supporter of all of us. I'm not saying anything about the organization or anything. As a person, he is a very lively and lovely person, and he supports any good move we all take. I thank you for coming and taking today's session, sir. And about Sri R.S. Balaji, is a fellow chartered accountant of the Institute of Chartered Accountants of India, and is a Bachelor of Commerce from University of Madras, and is a specialized in audits and indirect taxation. Is a member Audit Assurance Standard Board of ICAI. He was a member in 2019, 20, 2021. He was a member Academic Council of Sri Sankara Arts and College, Kanchipuram, Arts and Science College, Kanchipuram, and is a member and editorial board of Pathka Publications, and is a faculty for the following subjects: auditing and assurance for CA intermediate, advanced auditing and professional ethics for CA final, indirect tax law and information systems and control audit for CA final, and is been awarded as best outgoing student and secured college first in BCom. Thank you, sir. He has handled international taxation and corporate taxation in NASDAQ listed companies, worked as AGM accounts of NBFC companies, completed certificate courses in international taxation. I think what he has been so humble to give us a very small about him, but we know about his performance and the support, and to the members of our institute. I thank you for accepting this invitation, sir. Welcome, sir. Please, the floor is yours, sir. Thank you, sir.
Thanks a lot, sir. Namaskarams to the Treasurer, Honorable C.S. Sudarajan, sir, for this wonderful initial introduction. Thanks, sir. I'm humbled and moved with your love and affection. I can very much vouch that out of love and affection, you are showering your blessings to us. Thanks, and thanks for the chairman as well as the secretary and all the organizers of the SIRC of ICAI for having this wonderful series of the educative material on standards on auditing here. As Sundarajan sir was just talking about, was so interested in bringing out various practical perspective into the practice. He was also just now, he was talking about, before the commencement, he was talking about how we can link this, the agricultural accounting standards with the practice, so that the economy as a whole can be benefited, it can be streamlined, regulated, like that we were just talking. Thanks for all the initiatives under the able leadership of various leaders of the SIRC. We are marching towards a wonderful journey as chartered accountant. Very good evening, members. Thanks for your participation in spite of your pressurized commitment for this July 31. I can totally understand the commitments that you have in complying for the clients. always it is whether we have filed our returns or not, that comes for the least priority. We take care of the client's compliance, and then we advise them properly, guide them properly to go for the tax compliances and all. Hats off to you all people. And then in spite of that, you are also here for this particular session. It's my pleasure to be part of this particular wonderful initiative of SIRC here. Kindly bear with the background shadow light. Sun is always as an essential for this world. So here also there is a sunlight that gives an impact on the lighting. After say for example 15-20 minutes, it will be automatically, the lighting will be proper. Where in today's discussion, I would like to have they have very keenly, this is a series of standards on auditing that the institute has organized. In this particular series, where they go with a live discussion on various aspects. Just a minute, I'll just show my screen so that Selva, whether my screen is visible?
Yeah, now we stopped it, so you need to share it again, please. Yeah, now it's visible. Yeah, visible.
Yes. Just a minute.
Yeah, visible.
And to hide the video, my webcam is also visible.
No, sir. Webcam is visible on separate panel, and PPT is on separate panel. It's visible, sir. You can continue.
Okay, very good. Thank you.
Thank you.
Thank you, my dear friends. Selva, please help me in case of any disturbances or something like
yes, sir,
you are not.
Yes, I'll be there. Honored.
Yes, as this particular series is designed by SIRC in such a way that we are having a compliance of all the standards on auditing in a different perspective, and also in a logical perspective. They have grouped these standards. In today's discussion, that we will be taking out somewhere around 6 standards on auditing. Even with the 2 hours timeline, we may be having a wonderful discussion on these particular 6 standards, which are considered to be very important. SA 230, 240, 501, 505, 570, as well as 580. All are grouped in a logical fashion here, where for my discussion purposes, dear friends, I would like to have the discussion on 230 and 580 at a later point of time, at the end of this particular discussion. To start with SA 240, because the relevance of 240, 501, 55, and then 570 is having an impact on the SA 230. That is nothing but the audit documentation. Because as I always used to tell in any meeting, the vaccination dose for the chartered accountants who are protecting many other clients, many other audits where we perform many other audits where we are exposed to a sort of a risk, something called as audit risk, where we are going to have a deeper discussion on that. So to protect that particular audit risk, or to have vaccination as shield for us in order to protect ourselves, we need to necessarily comply with these 2 particular SAs, SA 230 as well as SA 580. The moment we are in a position to have the documentation as required by the standards, as well as getting the representation from the management as required by the standards SA 580, these are all 2 closing factors. The moment we cover it correctly, so that we may be in a position to prove that we have taken all reasonable care and caution while we perform an audit of a financial statements here. Let me begin my discussion before even going for SA 230 here or 240 here. A little bit of caution that I would like to make to all the members here, where with regard to the Companies Act 2013, a mere remembrance of Companies Act 1956, when you can read out, in Companies Act 1956, the old law, it never talked about the way in which auditor has to carry out the work. It talked about the qualifications, disqualifications, even rights and responsibilities of the auditor. It never talked about the way in which audit has to be performed. It's all decided based on the judgment of the auditor, ethical perspective, and then the code of ethics and CA Act, whatever that they regulate. That is the way in which we need to go in for. So the Companies Act was so silent in the way in which we need to take up. But now Companies Act 2013 is very, very specific here. It gives me the responsibility. Under 143, it is actually the duties of the auditors, where it imposes a specific duty to the auditor under 143(9), that every auditor shall comply with auditing standards. It is shall comply with auditing standards. So it is a mandatory compliance for the auditing standards that we need to go in for. So what is the standards on auditing and auditing standards? Is it 2 different aspects? No, absolutely no. Where the moment the institute issues these particular standards, it will be treated as standards on auditing. the way in which it is pronounced by the MCA as notification, they convert that as auditing standards and no other change that they do after recommendation of NAFRA, which is as per 143.10. 143.10 says the central government may prescribe the standards of auditing as recommended by the ICAI in consultation and after examination by the National Financial Reporting Authority. The talk of the town is on this particular NAFRA. Their regulations, their review reports and all are obviously considered to be important today in present scenario, where these particular NAFRA will be recommending to MCA to notify those standards that are issued by ICAI, which is to be mandatory to be complied by the auditor. I don't have an option now. Earlier also, my regulatory body, ICAI, also prescribed standards on auditing. My legal and relevant statutory requirement, my Companies Act also prescribes this particular standards on auditing. So in a two-way mandatory perspective, the auditor has to necessarily comply with that. Even in my audit reporting, as discussed in SA 700, where the auditor has to give a declaration that we have conducted our audit in accordance with standards on auditing, like that, there shall be a mandatory declaration that is to be given by the auditor in compliance with section 143.9. So the importance that I am trying to emphasize here is standards on auditing are considered to be at par with accounting standards with regard to compliance is concerned. At least accounting standards, it is a responsibility of the management to go with, and the auditor has to only verify whether it has been complied or not. But with regard to standards is concerned, it is the responsibility of the auditor to go and comply with the various requirements that are given in the standards on auditing here. As I was talking about, every audit, the moment I take up an audit, I have been appointed as an auditor to express an opinion. There is a very high possibility that an audit may go wrong. The auditor may provide an inappropriate opinion. That is something called as audit risk, the possibility of auditor going wrong. I should not go wrong. I need to always provide an appropriate audit opinion is what the objective of audit. So we always have to analyze this particular risk of going wrong, and then I need to address that particular aspect not to go wrong. So there are something like inherent risk and control risk, which is considered to be pre-audit risk, which is also called as the risk of material misstatement. The gateways through which the material misstatement can enter into the financial statement, where I'm going to sign in on it. And the detection risk is the audit procedures that are to be performed by the auditor, which allows the auditor not to detect a particular material misstatement, which all consolidate together and then manifest as an audit risk, the possibility of auditor going wrong, providing an inappropriate opinion. That should never happen. So the objective being to provide an appropriate audit opinion, I need to comply with standards on auditing. The moment I do whatever the specification, step-by-step compliance as given by the standards, automatically I am in a position to reduce this particular audit risk to an acceptable low level. It's a beautiful concept that is discussed in every essay. So I need to have these particular aspects under constant consideration, and then I need to proceed further. Coming back to today's discussion, where essay 240, the first essay that I'm going to discuss about, is about frauds. Auditors' responsibilities relating to fraud in an audit of financial statement. The moment you think of essay 240, the moment you think of frauds, you need to immediately have your impact on these further aspects also. There are other responsibilities for the auditor relating to fraud, like essay 240 compliance, professional skepticism to be maintained, section 143.12 of the Companies Act, which is again gives a specific responsibility to the auditor to go for it. And also there is a CARO reporting responsibilities under fraud. So what is the role of an auditor with regard to fraud? Right from Kingston Cotton Mill case, we have very clear-cut emphasis. The auditor is just a watchdog and not a bloodhound, where I am not expected to be a detective agent. I will be expected to perform a reasonable, careful, cautious verification. Where the financial statements in this present environment, in the economic scenario, there are a lot of misrepresentations that are being made in the financial statements, and there are a lot of fraudulent financial reporting that are also happening. The first question in that particular case will be to the auditor. What happened to the auditor? Why auditor has not detected it? Had he verified properly, he would have detected it. Why he has not detected? He has simply signed it. Is he sleeping? So we'll take action against the auditor will be the general perspective people may be talking about. But really, what is my role with regard to a fraud? As an auditor, as standards on auditing very clearly say that the responsibility of the auditor is just to exercise reasonable care and caution and to do the audit with professional skepticism. Apart from it, it is no longer my responsibility, that it shall be the responsibility of the management. Always it is the responsibilities of the management to detect and prevent these particular frauds. So, however, I cannot close my eyes. So it is the responsibilities of the audit management. So I need not go and do anything relating to fraud like that. There are other related aspects that are imposed on the auditor, even as per SA 240. Let us understand one by one what does 240 says, what do you mean by professional skepticism, what is the role as per 143.12, and also under CARO reporting, CARO 2020, which is a recent reporting requirement change that we have to move on. So there are other additional responsibilities that are casted to the auditor in this specific regard. We are going to focus on specific practice perspective. I'm not here to discuss something about the theoretical perspective or to go for a research mode. Very much we can do that research mode on it, but here we will be having an impact on the practicality perspective. My role, my responsibilities, my duties is what the discussion that we would like to make here. SA 240, it talks about auditors' responsibilities relating to fraud in an audit of a financial statement. Even though you are not responsible for deduction of it, then what is your role in it is very clearly discussed in this particular 240. It talks about the role of the auditor to identify and assess the risk of material misstatement, especially due to fraud. There are possibilities of inherent risk and control risk because of frauds. I need to be aware, I need to be verifying that. And then the moment I identify there are weaknesses, there are possibilities of frauds, to modify his audit procedures based on such assessment. The moment your internal controls are weak, the moment there are more inherent risk is high on that particular entity, my audit procedures, I will be extending my audit procedures rather than shrinking it. And then I will be going for a deeper verification in that particular case. And then to obtain sufficient appropriate audit evidence about whether the financial statements, considering the financial statement as a whole, are free from material misstatements, whether due to fraud or error here. When we go for a fraud, what is the intention? It is an intentional activity. When we even in direct taxes and indirect taxes with regard to prosecution, we may go for it something called as mens rea, whether mens rea was there or not, a culpable mind was there or not. Only then there may be a prosecution could be allowed. Where the general assumption by the courts is mens rea is there unless otherwise proved here. So here with regard to fraud, exactly the same aspect. An intentional act by one or more individuals among management, or those charged with governance, or even by employees or by the third parties. So there is no exception. It can be from those charged with governance level, top level, or it may be by the management level, or it may be by the employees, or even by a third party who may be involving the use of deception to obtain an unjust or an illegal advantage will be termed as a fraud. Something under the old excise law, which is replaced by now GST. Under the old law, we have something called as unjust enrichment. When your credit is not eligible, but you are trying to do fraudulent means and then you are availing the credit, it will be treated as unjust enrichment where you need to expense this credit. Similarly, here also where the person who does this particular fraud is trying to have an unjust or an illegal advantage which is not actually accruing to him, it may be for monetary or it may be even for a non-monetary term. With regard to the frauds, which is always considered to be difficult for any person to detect it, what is my role as a statutory auditor? SA very clearly gives this particular perspective. There are only two types of frauds that an auditor has to bother about. As long as I'm going to do an audit of a financial statement, the two types of frauds that is to be concerned to the auditor is fraudulent financial reporting and misappropriation of assets are the only types of frauds, two types of frauds that the auditor has to bother about. One is fraudulent financial reporting. As the name denotes, in financial reporting, there are fraudulent means and ways that are being included so that there are misrepresentations that are being made in the financial statement where the users can be influenced by this particular numbers, something called as fraudulent financial reporting. And the other one is misappropriation of assets. Maybe my assets can be misappropriated, cash frauds, bank frauds can be done in this particular regard to gain an advantage, monetary benefit, something called as misappropriation of assets. Let us go and understand what is the role that is SA 240 talks about to the auditor. Although fraud is a broad legal concept, SA very clearly says, for the purposes of the SAs, the auditor is concerned with fraud that causes a material misstatement in the financial statement. So since I am going to express my opinion on the financial statements, that too a material misstatement is also a concern. I'm going to look out only those frauds which is going to have an effect on the material misstatements on the financial statements. The two types of intentional misstatements are relevant to the auditor: misstatements resulting from fraudulent financial reporting and misstatements resulting from misappropriation of assets. As the essay is very specific, I'm not bothered about employee fraud, I'm not bothered about a vendor, I'm not bothered about a tender. All these are all may not have a direct effect on the financial statements unless it is having a financial effect. So the fraudulent financial reporting and misappropriation of assets are the two types of frauds that the auditor has to look into in compliance of SA 240. Although the auditor may suspect, or in rare cases, SA by itself recognizes, in a rare case I may identify the occurrence of fraud, the auditor does not make legal determination of whether fraud has actually happened or not. It is, I am not going to sit in a judge seat and then to say that fraud has happened, he is the person who committed fraud. No, there is no such responsibility that is casted to the auditor. Where the auditor is concerned, I may suspect that could be a fraud, or I may even say that there is a possibility of fraud, or in a remote case, I may say that there is a fraud. That's the role of the auditor, and I know legal determination of this particular fraud, the modus of operandi and all, will not be the perspective to the audit, which is very clearly stated in essays itself. As we talk about two types of fraud, fraudulent financial reporting and misappropriation, the fraudulent financial reporting is in otherwise colloquially called as window dressing. So I'm just dressing my window in a rosy picture so that the users, the investors, the vendors or other lenders are also happy to see this particular financial statement, which may be not the fact here. Maybe because of manipulation or falsification or alteration of records and documents, recording transactions without substance. There are no such transactions, but I will be recording those transactions. Especially when you see the year-end financials, there will be a lot of sales entries that could be passed to boost up the numbers so that I reach this particular target. Like that, there may be transactions without substance that would be recorded, or deliberate misapplication of my accounting policy. I know what is my accounting policy, which is to be consistently applied. But here in this case, in order to make a fraudulent financial reporting, the management or even maybe those charged with governance at times in a company may deliberately misapply their accounting policy, and then they to have a substantial numbers impact in the financials they may do. Or very importantly, very carefully, that we need to look into something about intentional omission of disclosures. There are various disclosures that are required to be made based on the financial reporting framework in which the company operates. My Companies Act wants a lot of disclosures to be made by way of the financial statements. Accounting standards, every accounting standard wants certain aspects to be disclosed. India AS wants certain aspects to be disclosed to the shareholders, so as to bring transparency, so as to bring corporate governance in that particular financial reporting on which I'm going to sign my express an opinion. So there are very high possibilities that there may be intentional misrepresentations that being made by the management in this regard, or omission of disclosures that could also be possible, which could result in a material misstatement, which could result in a fraudulent financial reporting here. Always this is a risk factor to the auditor. I need to be very careful, not only on the numbers, my balance sheet, my P&L, my cash flows. The numbers in these particular statements may be appropriate, may be proper, but still there are disclosures are also part of your financial statement. When in that particular disclosures there are non-disclosures or certain aspects that are not to be included, say for example a litigation claim, or there may be a substantial order against the company could have been passed which have a substantial effect on the financials, may not be disclosed at all, or my license to operate on that particular entity may be cancelled, which may not be reported by the entity at all, or a related party transaction may not be reported. Like that, there are intentional omissions of disclosures which could also result in a material misstatement, especially relating to going concern. Also there are impact that we are going to have it in SA 570 now. Recently this was a press release that is by CBI with regard to fraud, one of the fraud, where whatever that we are talking about exactly applies in this particular case as well. The CBI has registered a case filed by Canara Bank regarding fraud to the extent of 7,926 crores, somewhere around 8,000 crores of a fraud by a particular company. Case was registered against a Hyderabad-based private company, its CMD, additional directors, unknown public servants, and others on the complaint filed by the Canara Bank. It was alleged that the private firm had availed credit facilities using multiple banking arrangements, and then they misappropriated, siphoned off this particular money of 8,000 crores. A consortium was formed with other banks led by Canara Bank It was further alleged that the accused had falsified, fabricated of books of accounts, fudged stock statements, tampered with the balance sheets, and engaged round tripping of funds, resulting in 8,000 crores of loss to the bank here. So exactly whatever that we are talking about with regard to manipulation, falsification, alteration of records and documents, recording transactions, intentional omissions, all these are all finding place here. Falsified, fabricated books, fudged stock statements. I may be giving just like that a stock statement to the bankers as if there are huge stocks that are available. Even in Caro, they have a new reporting responsibilities that whether you have a facility, you have a funded facility where based on the current asset, and then the stock statement provided to the banker, is it aligned with the financial statement? Like that, the auditor is also having an additional responsibility here. So here, the point is there is a management fraud which created an 8,000 crores of impact because of the fraudulent financial reporting that was done by this particular entity. Again, a second case in a sequence, a second case was registered against the private company in Chennai with its chairman, directors, and others on a complaint by State Bank of India. The loans were amounts said to have been diverted to related parties. They have availed a loan. There is a loss of 320 crores. So you have availed a loan and then you have diverted that particular funds to a related party, which is not the end purpose of that particular loan availment. So end use of borrowings. Again, you have a Caro reporting requirement under end use of borrowings here. All these are all examples of these particular frauds where there are fraudulent financial reporting or misappropriation of assets could be involved, which could have a huge financial impact. It is also having a direct effect or bearing on the auditor's work also. How the auditor has not identified, why the auditor has not identified like that. So what is expected from the auditor's perspective is I need to have reasonable care and caution. How to prove that I have taken reasonable care and caution? Sir, I was very careful in verifying this. Irrespective of this fact, I am not in a position to detect it. Then what I have to do? No problem for you. Non-detection of a fraud is not a problem for the auditor at all at any point of time. But the point is I need to be in a position to prove that I have taken reasonable care and caution by way of my documentation. That is the only aspect that will come for my rescue. As I told you, that is the only vaccination that could be available here. I need to document what are all the precautions that I have verified, what are all the areas that I have done, how my professional skepticism has been applied, and then what is the results, what is the outcome of it, and on what basis I have concluded like that. I need to go for a sequential documentation as stipulated by SA 230, read with the relevant essays. I will be in a position to protect myself. Otherwise, there will be a clean scope for the auditor to get it answerable for these particular frauds also. In no way I may be connected with that. The second type of fraud is something about misappropriation of assets, where there may be theft or pilferage of assets or frauds on a cash or a bank transaction due to design error or lack of internal control. See, please understand there are huge bank frauds that could happen. There are possibilities of fake phone calls, and then I may share my passwords, share my PIN number, and the OTPs can be shared, and the ATM numbers can be shared, so that there are siphoning of money that may happen. That's a different perspective. That's not I'm talking about with regard to the financial statement of bank transactions, where in a company your check signing authority, you get the overdrawing of the value, or you forge that particular checks and then you misuse that particular power, where you transfer the money within your authority and then to other parties, which is for personal reasons. Like that, you have frauds on cash and bank transactions, teaming and lading that could be possible, depositing money into your account instead of the company's account. Like that, there are possibilities of misappropriation of assets, are the two, which is having a bearing on the financial statements, are the two types of frauds that the auditor is to bother about. Like diverting receipts, misappropriation of collection, diverting receipts from write-off accounts. There are items that could have been written off, and then fortunately you are collecting the money, then in the books of accounts they don't have anything receivable because it has been already written off. So it can be swindled, it can be money can be pocketed. That should not be happening here. Stealing of assets or intellectual property, this is also a new way of misappropriation of assets that is cropping in. There are disclosing technological data in return for payments. There are kickbacks. So my data nowadays, today in the technological environment, the data about the customer, the data about the pattern of their usage, their date of birth, their Aadhaar numbers, like that, you have huge confidential data. All these are all can be dumped, can be stored to others, can be sold to others, and then there are possibilities of misappropriation of assets. Intellectual property can be misused here. Kickbacks from vendors may be a regular phenomenon. paying for fictitious supplies, kickbacks due to inflated price or inferior quality. Like that, there are possibilities of misappropriation of assets as well. When we compare with regard to the risk relating to fraud, audit risk relating to fraud, the possibility of auditor providing an inappropriate opinion, when you compare with an error vis-a-vis fraud, frauds are always higher responsible, or I am unable to detect a material misstatement resulting from fraud is greater than that of a resulting one that of an error here. The risk of not detecting a material misstatement resulting from a fraud is higher than the risk of the one that is not detecting from an error here. Why? Because as the name denotes, error is an unintentional activity. On the other hand, fraud is an intentional activity. The person who commits this knows that there will be an auditor who will be coming back and verifying. So he deliberately conceals this particular operations. He deliberately makes misrepresentation, sophisticated way in which there are frauds that can be committed, which may not be detected at all in spite of having reasonable care and caution here. This is because frauds may involve sophisticated and carefully organized schemes designed to conceal it, such as forgery, deliberate failure to record transactions, or intentional misrepresentations being made to the auditor. There are very many cases, intentional misrepresentation that could be made because my entire audit is based on the information explanations provided to me. 365 days, 24/7, the company is operating. They have the data, but it may not be possible for the auditor to have all such information unless it has been given to me properly. Where there are intentional misrepresentations are being made, it may not be possible for the auditor to detect it at all, which is a risk factor that the auditor has to consider. Also, the risk of auditor not detecting a material misstatement resulting from a management fraud is greater than that of an employee fraud. Why? Because employees are always having their boundaries, and within their authority they can be in a position to work, and then they cannot go beyond. But that's not the case of a management fraud. Whenever you have a management fraud, always understand that could be possibility of related party transactions also. That's an impact that you need to learn. SA 550, 550 exclusively talks about related party transactions, how it is to be verified, what fraud risk factors to be considered by the auditor. Sorry. Here also, when there is a management fraud, and the risk of not detecting the auditor on that particular management fraud is very high, because management can override the controls. They may directly or indirectly manipulate the accounting records, because the top level person by itself says, this is what my profit I want, so no other compromise on it, you work accordingly. Like that, there are numbers that may be fixed, prefixed, and then I may be working accordingly. The management may be driven with that particular pressure, or present fraudulent financial information, or override the control procedures and process. For every transaction, the company will be following internal controls and SOPs. When the management is involved, they may not have that particular SOPs to operate, because they may go and instantly decide on that particular issue. No tender processing, no getting quotation, L1, L2, nothing doing. When the top level person says you place an order with him, that's it. So no more internal controls, no more procedures and process that have to be adopted. There is a very high possibility of management fraud rather than an employee fraud, which may be detected by the auditor here. The specific procedures as told by SA 240 with regard to management override of control shall be where the management overriding controls is a significant risk of material misstatement, because more possibilities of errors and frauds to happen. Frauds may also happen, related party transaction. The terms and conditions may be influenced. Like that, there are significant high risk is there. The auditor has to be very careful in extending the audit procedure. I need to determine the nature, timing, and extent of audit procedures considering this particular risk factor. Or there could be simple adjustment to financial statements through journal. Just like that, they'll pass one accounting entry. That's it. It may not be even revealed to the auditor. I will be doing based on one particular trial balance, all the data that I will verify this, that, and comparison, and then these are all the area which is risky. Like that, I would be watching word. But suddenly, without even telling that there will be an accounting entry that may be deleted, there may be an accounting entry that may be just like that posted, or backdated entry can be incorporated. Like that, there are a huge possibility of adjustments or manipulation with regard to the finance statement that may happen because of a journal entry to include it. That's why under Companies Act, under 143(3) reporting responsibilities, under rule 11, we have one another item to be reported from next year onwards. Originally they have brought in, but they have not included to be reported now. The audit log with regard to the accounting software that are being used by the entity, whether are you having audit log which shows the traces of whatever the amendments that got made in the financial statements, in the accounting records, are all to be maintained by the entity, so that there will be an audit trail that shall be available to the auditor to verify what are all the accounting entries that are posted, when it got amended, why it got amended, who is done. Like that, I may be in a position to go for analysis as well. And then reviewing accounting estimates. There are very many places there are estimates, assumptions, and judgments are involved, including the going concern assumption, basis of accounting, or your estimates with regard to litigations and claims. Very carefully, when you need to go in for it, there are litigations and claims which may have a huge impact, which is to be estimated very properly. The company may say, yes, I am very confident in winning this particular case, but the impact on the financial statements could be very, very huge and high, where even the company may not be in a position to withstand when the order has been passed against the company. So in that particular case, how the management evaluates, how the auditor also responds back, like that, I need to be very careful, especially there could be a management fraud in this particular regard, which could result in fraudulent financial reporting here. Review accounting estimates made for buyers and evaluate whether the circumstances producing the buyers represents a risk of material misstatement due to fraud or not, to be evaluated by the auditor here. There are 3 fraud risk factors as discussed by SA 240. The 3 fraud risk factors are: number 1, there is an incentive when I commit this particular fraud, I am committing this particular fraud. There may be a benefit. It may be predominantly monetary benefit, it may be non-monetary benefit also, like power or fame, like that. There may be possibilities I am performing this particular fraud because of an incentive. Or the second case is where there is a pressure to commit a fraud, I am committing a fraud. The top level management says, you pass this entry, you don't bother about anyone, you give this order to this party. Like that, there are pressure to commit a fraud. Also, there are pressures like external, like next year I'm going for an IPO, so I need to necessarily make my profit in the balance sheets. Or there are a new investor who is going to make in money, bring in money, so necessarily I need to show beautiful numbers. Like that, I may be having a pressure to commit a particular fraud. I am committing a fraud. The third one is very interesting, that there is an opportunity to commit a fraud. There is no one to monitor. The user process are so weak that even a person commits a fraud, nobody is there to identify or even detect that there is a fraud that has happened. So there are possibilities to commit a fraud. Provide an opportunity to commit a fraud are the 3 fraud risk factors. The cost factors for this particular frauds are these 3. Considering these 3, the auditor has to evaluate and perform audit procedures accordingly. There may be pressures from the management, or maybe deficiencies in internal controls, or incentive pressure, or even lack of monitoring. All these can be bucketed into the 3 fraud risk factors. Say, for example, pressure from the management will be in the second type. Deficiency in internal control can be of the third one. Incentive pressure may be of the first one. Lack of monitoring will again be on the third one. Like that, I may bucket any activity into these 3 fraud risk factors, which allows the frauds to happen. Considering that there are possibilities of frauds, the auditor has to look out. The auditor needs to always have something called as professional skepticism. Who is responsible for detecting the frauds? It is obviously and absolutely it is the responsibility of the management to detect the frauds, and no way it is the responsibility of the auditor. It is recognized, captured in essays itself. The management's responsibility, the primary responsibility for the prevention and detection of frauds, rests with the management and those charged with governance here. When it is of the management's responsibility, then what is your responsibility? Being an auditor who is going to express an opinion on the financial statements while doing an audit as per standards on auditing, my responsibility is to do my audit with professional skepticism. That's it. Over. No more further responsibility. I need to exercise reasonable care and caution by way of doing my audit with professional skepticism. This is an important term that is discussed globally. Even international standards on even international auditing and assurance standards boards discuss this particular aspect of professional skepticism. What do you mean by professional skepticism? It is an attitude of an auditor having a questioning mind. There are 3 parameters to be developed with this particular professional skepticism. Number 1, attitude of an auditor having a questioning mind, being alert to conditions that could be indicating possibilities of errors and frauds, and critical assessment of my audit evidences, whether is it sufficient and appropriate or not, are the three attitudes that is to be always a constant factor to be maintained by the auditor, which is something called as professional skepticism. Please be careful in this particular regard. I need not be suspicious. An auditor is not to go for a suspicion, but the auditor has to go for skepticism. I need to have a questioning mind. Why this? Why not that? The moment there are possibilities of frauds and errors, there are indicators. I need to be vigilant. I need to be awake, and then I need to go for a deeper verification. I cannot compromise on my quality. And the third one is critical assessment of my audit evidences. Is it sufficient? Is it appropriate? Is it reliable? First of all, is it relevant? Like that, I need to go for a questioning mind, which will be helping the auditor to go and do the audit with all reasonable care and caution, record the particular data, that whatever that I have done, in order to prove that I have taken reasonable care and caution here. And what are all the roles with regard to the auditor's responsibility relating to fraud here is, even though the professional skepticism is the aspect that I need to maintain, here you need to go for understanding that the auditor has to evaluate the possibility of misstatement, especially misstatement is the problematic aspect. Misstatement may be because of two factors. One is through error and the other one is through fraud. So frauds and errors can cause this particular misstatement, which could be individually or in aggregate could be having a potentiality of becoming a material misstatement, which may be having an effect on the financial statements, which is where to say that the financial statements are not free from material misstatement. So I need to first of all evaluate what are all the possibilities through which a misstatement can happen, especially through fraud, and review the internal controls, the risk assessment procedures that are done by the management, RAP to be done by the management, as well as RAP to be done by the auditor also. It is a walkthrough that I have to verify what are all the various risks that the management has assessed, their likelihood, their occurrence, their impact, the potentiality, and the action to be taken on those particular risks. It's like a risk matrix. It's a risk management that the management has to do. That's why even in listed entities and all, we go with LODR regulation wants something like a risk management committee has to be formed, and then they need to analyze what are all the various risks which could result in a material misstatement in the financial statement, and then identify the possible weaknesses by the auditor, where SA 265 also talks about identification of internal control, significant control deficiencies. It may be communicated to those charged with governance. Similarly, here also identify, if not identify something brought to my notice, I need to be aware about that, and then I need to take action, what could be the impact, and then obtain sufficient appropriate audit evidence, including the management's representation, SA 580, that it is their responsibility to detect and prevent errors and frauds, and then document whatever that I have performed and the conclusions reached. What's the conclusion that I'm reaching, and what's the basis on which I'm reaching this particular conclusion has to be documented by the auditor as an important step for compliance of SA 240. With regard to SA 240, incidental and ancillary to the main product, there are byproducts like Companies Act reporting, CARO reporting and all. You have section 143(12) of the Companies Act, which is another important section that is to be complied by the auditor here. I need to communicate about frauds to the central government. What is that I need to communicate to the central government? Every fraud that I have to communicate? Answer was yes at a particular point of time. At the time of original introduction of Companies Act, they have not given any threshold limit and all. Every fraud has to be communicated to the management as well as to the central government. There is no materiality concept that was incorporated. There was no numbers, threshold limits that they have told. Say for example, even for a 50 rupees, there is a petty cash fraud. It is a requirement for the auditor to report to the central government and to the management. It was the position of Companies Act. But thank God that they have given a threshold limit here after serious representations even made by ICAI. MCA made an amendment in this particular regard under 143(12), where only those offences or frauds which involve or expected to involve individually an amount of rupees 1 crore or more needs to be reported to the central government. So now the materiality threshold for the purpose of reporting under section 143(12) shall be rupees 1 crore or more. The moment individually a possibility of fraud, or you suspect that could be a fraud, or you establish that there is a fraud which is having an effect of rupees 1 crore or more, then it has to be reported both to the management as well as to the central government here. When I need to immediately report it to the management within 2 days time, immediately to be reported. to the management the moment I come across that particular fraud. It's not that I have to establish. The moment even a suspicion is there, I may be in a position to communicate. In such a case, the management has to take a note of this particular auditor's report and then find out what is the real fact, whether there is really a fraud, whether it's only an error or there is no such activity, whether who are the persons who are involved, have you taken recovered the money back, like that the action taken and the effects on the same to be done by the management within a period of 45 days. And then after that the management has to respond. If at all there are audit committees, then the audit committee has to respond to the auditor stating that this is what the fact you have told, yes we have detected, now this is the status. You have told no there was no fraud, but there was an error that we have rectified. That the position has to be responded back to the auditor within 45 days time, and after receipt of that the auditor has to communicate to the central government in ADT4, but there is another ADT2 is the one that we need to go for removal of the auditor before expiry of tenure, that is ADT2. In ADT4 is the one which is to be filed by the auditor. ADT2 will be filed by the management of the entity against the auditor, and ADT4 will be the aspect that the auditor will be finding back to the central government stating that there are frauds and which involves central government's attention also. The same provision of 143.12 will be equally applicable to a chartered accountant doing a financial statement audit, a company secretary who is doing a secretarial audit, and also a cost accountant who is doing a cost audit. The moment they come across a fraud, they need to communicate to the central government, otherwise there are penalties. In case of listed companies, other companies like that, there are impact under section 143.12 of the Companies Act. Apart from it, CARO reporting responsibility, CARO 2020. Originally, this was CARO reporting responsibility under CARO 2016. Now, from this year onwards, that we are going to report under CARO 2020, which is having an additional responsibility. The question was whether any fraud by the company, any fraud on the company, by its officers or employees has been noticed or reported during the year. So there are two perspectives. One is fraud by the company and the other one is frauds on the company. Both has to be looked into by the auditor and then to be reported under CARO. If yes, the nature and the amount involved is to be reported. And the second question is on this particular ADT4, whether any report under section 143.12 of the Companies Act have been filed by the auditors in form ADT4 as prescribed under Rule 13 of the Companies Audit and Auditors Rules with the central government. And lastly, there is also something about a vigil mechanism, whether an auditor has considered whistleblower complaints, if any, received during the year by the company. Here there is something called as whistleblower complaints vigil mechanism as per section 177 of the Companies Act, where there are audit committees to be established, and also for listed company LODR regulations are also to be established, whether any whistleblower complaints have been made, how the audit committee has reacted, how the auditor has considered with regard to his working. All are to be consolidated and then to be having a comprehensive approach by the auditor, so that he doesn't miss out any of his own moral responsibility in verification aspects, including the fraud reporting to the shareholders under CARO reporting here. That's it with regard to SA 240, the fraud related aspects. There are very other many areas could also be there, but in order to have a comprehensive review over SA 240, this one can be very much helpful here. And the next one that we are moving towards is SA 501, that talks about specific considerations with regard to audit evidence. Entire 500 series of standards talks about audit evidence and the way in which audit evidence is to be obtained by the auditor. 500 being the base standard for entire audit evidence, it talks about what do you mean by audit evidence, how it is to be obtained, on what basis it will be the base for forming an opinion. Like that, SA 500 is considered to be the spine of that particular auditor. Incidentally, there are other essays that also talks about the methodologies and modes in which audit evidences can be obtained. All other essays are very generic in nature, but our SA 501 is very, very specific in nature. It specifically and precisely talks about three aspects in order to get audit evidence in your audit. For these three aspects, how to get an audit evidence, because all three are considered to be very relevant and important. That's why they have a separate essay that is drafted for these particular three aspects. Number one, inventory. Number two, litigations and claims. And number three, segment reporting are the three aspects or components in the financial statements that are specifically to be verified and audit evidence has to be obtained as per SA 501 here. Let us understand this particular SA 501 because it's having a direct bearing on the every audit, in predominantly in all the audits that you may have litigations and claims, you may have inventory also. Maybe segment reporting may not be very popular, but still SA talks about this particular aspects here: existence and conditions of inventory, completeness of litigations and claims, and presentation and disclosure of segment information with regard to compliance of financial reporting framework. With regard to the third point, that with regard to segment information is concerned, SA is very clear. SA just says you go and refer your financial reporting framework, accounting standard, whatever that they want, you do it. That's it. No more aspects. But with regard to inventory and litigations and claims, there are a lot of audit procedures and processes that are discussed by this particular essay here. Let us understand one by one. With regard to physical verification of inventory, wherever possible, I am trying to go for a comprehensive impact. I am always quoting the impact of CARO also because it's considered to be very important. The auditor cannot see the standards compliance alone. He needs to go for other reporting responsibilities also and then consolidated, comprehend that, and then to go for it. Even this particular 501 is having an impact on CARO. Let me go for that particular discussion also. Physical verification of inventory is specifically discussed under this particular CARO and also as per SA 501. In CARO 2020, under 3.2 of the clause where we have discussion on inventory, previously CARO 2016 was very simple. CARO 2020 now imposes additional responsibilities to the auditor, which is to be very carefully complied with. Whether physical verification of inventory has been conducted at reasonable intervals by the management, and whether in the opinion of the auditor, the coverage and procedure of such verification by the management is appropriate. This is a new inclusion that is made under Companies Act 2020. Whether any discrepancies of 10% or more in aggregate of each class of inventory were noticed, if so, whether they have been properly dealt in the books of accounts or not. Previously, the materiality thresholds are not discussed. Whether material discrepancies have been noticed or not is the wording that was used. So it will be the auditor's judgment to decide whether it is material or not. Now the materiality threshold is discussed in the CARO clause itself. 10% or more in each class of inventory is considered to be material. If it is so, how it has been looked into, how it has been dealt in the books of accounts are to be reported by the auditor here. So the point that I am coming here is the physical verification of inventory shall be the responsibility of the management. But however, I need to be physically present at the time of the management doing this particular inventory verification as discussed by SA 501. And also the coverage and procedure of such verification by the management is appropriate or not to be reported by the auditor, specific compliance of 501 here. What is the procedure that is to be followed? It is the responsibility of the auditor to be present at the time of stock taking, maybe through himself or through the audit engagement team. Observe the procedure performed by the management. Is it appropriate or not? Because different types of inventory wants different type of verification mechanism. A crude oil will be requiring a different type of verification rather than tea bags that are put in 1 kg packets will be wanting a different type of verification procedure. So there are different aspects that will be applied based on the inventory and the complexities involved. Say for example, for a seafood export company, the seafoods will be stored in a particular temperature and in a cold storage unit. It may not be practically possible for the auditor to enter into that particular place at all because of the temperature. So in that particular case, what alternative audit procedures can be done by the auditor, how livestock can be taken as a verification mechanism, whether can you use drone technology to verify something. Nowadays, physical verification and all through tagging, you don't do counting and all, you just have a reader, OMR reader, and then just like that click on the tag so that automatically the number will be taken care. Like that, we have different procedures that can be adopted. What is the role with which the management verifies has to be looked into by the auditor, and also inspect inventory and perform test counts. There are possibility of test counting, test check basis also. Say for example, the management says each bag contains 100 kgs and then I have 100 bags. So the inventory computation will be 100 kgs into 100 bags will be my total stock. In that regard, whether really this particular bag contains 100 kgs or not, it may not be practically possible for the auditor to go and put weight for all 100 bags. the management will also be annoyed on that. So on a test check basis, you may take on sample basis and then cross verify with the weight whether is there anything excess or shortage. Like that, I may have a conviction based on the reasonable assurance based on the test check here. Verify estimations of the management, WIP estimation, and slow and non-moving items also. There are other areas, a lot of areas wherein estimations will also be made by the management with regard to stocks. It may not be in a position to possibly precisely evaluate the stock quantity. Say for example, Neyveli Lignite Corporation, which is a big entity, they have lignite stock, which will be absolutely based on an estimation. They may not be in a position to tell the quantum. Or in a salt manufacturing company, the salt could have been heaped, and then in the salt pan you may be heaped. The quantity will be based on an estimation. This is what the height and width of this, and then this heap will be having this much of quantum. It's based on the past experience, based on the proven history. I may be in a position to quantify that. It is again based on an estimation. The possibility of inherent risk by which a metal misstatement can be there is something very high on that regard. Also in a petrol and petroleum crude which is exposed to natural loss, and also your evaluation measurement may not be very precise. It may be based on the automation systems, or it may be based on the measurements, or even infra-rays, wherein you may be in a position to determine the quantum, or WIP estimation, slow moving, non-moving items, where there are no movement at all in the stocks for this particular period, then the possibility of becoming obsolete is very high. The possibility of pilferage is also very high on those areas. I need to be very careful in evaluating it. All are discussed in SAE 501. Also, there are possibility of applying cutoff procedures. What is your first GRN number? What is your last stores issue ticket number? What is your last purchases? All this has to be done so that your quantum of stock is appropriately arrived at or not shall be verified by the auditor through the cutoff procedures. And also the auditor has to obtain sufficient appropriate audit evidence with regard to the quantum of the stock that's determined by the management here. With regard to SAE 501, that talks imposition to the auditor, they say that attendance at physical verification is, unless it is practicable, you need to be there, you need to be physically present, is what the requirement given to the auditor as per SAE 501, either through yourself or through your engagement team. Whenever in a remote possibility, when the physical verification is conducted by the management at a date other than the date of financial statement, then the management should disclose the fact and reasons for the same to the auditor. Why you have done this? Say for example, it was exactly happening for the past 2 years when as on 31st March 2020 as well as on 31st March 2021, we had complete lockdown due to COVID. So it was not possible for any person to go and do the audit as on the closing date of the financial statement. Maybe at an alternative date, we might have done this particular financial statement verification, inventory verification. In that particular case, the reason for the same has to be documented. I need not disclose it to anyone, but it has to be documented as a part of my audit process. If at all I was not in a position to be present at the time of physical verification, alternative audit procedures and the reconciliation of that particular movement in between the transactions has to be evaluated by the auditor. And lastly, when the inventory is under custody of or control of a third party, say for example, as on 31st March, I have sent my stocks to my job contractor or subcontractor, or as on 31st March, my goods are in my at warehouse. As on 31st March, my goods are in transit, especially in transit. 31st March in transit 2020, there was huge in transit stock. Everything was standstill at different stock location. It was lying. Subsequent, it reaches this particular item, it reaches the destination, will be an audit evidence that could be available for the auditor to say as on the date inventory was available. In case where your inventory is under the control and custody of the third party, including the service organization or a subcontractor or a job worker, it may be possible for the auditor to obtain a confirmation in this regard, where there will be an external confirmation. We are going to have this particular aspect also. SAE 505 deals with regard to external confirmation, and also if permitted, I may also perform an inspection over there. If at all it is as per the agreed terms between the subcontractor and the principal worker, then it may be possible for me to go for physical verification also there at that particular premises. Otherwise, you may also get a certificate from the service organization's auditor, where you will be applying SAE 402 or the service organization auditor, while giving the certificate, he will be working based on SAEs 3402. That is standards on assurance engagement 3402 should be applied by the service organization auditor. With regard to SA 230, documentation is concerned, because I always say that we need to protect ourselves. What is the documentation that is required? See, one of the important point that I insist upon is, it's not only we have to understand the same implication that we need to give it to our audit staff as well, audit engagement team members, so that they are also benefiting, they are also performing, and then they are also protecting us. What is the extent and coverage of physical verification along with the value? Say, for example, you may not go for 100% verification always. At times 50%, minimum 75%, like that, you may go for a verification. Extent of coverage and PV with the value. Instructions by the management to staff and instruction by the auditor to the engagement team has to be evaluated and has to be verified. Where inventory physical verification sheets duly authenticated by the entity and by the engagement team has to be recorded as a part of my documentation. Usually this will be done. The date of inventory at the time, what are all the part numbers which is verified, what is the book stock, what is the physical stock, what is the discrepancy, like that they will be recording it, and then they will be signing it physically. That record will be a very good evidence that is available for the auditor to prove that there is a verification that was processed. Extract of the copies of annual accounts, books of accounts, inventory ledger, reconciliation statement with the subcontractor, like that there are possibility of outputs from the records and financial records which will prove what was the book stock and what is the physical stock here. Wherever there are material discrepancies identified, including the of a 10% or more, like that, wherever there are material discrepancies, impact has to be documented. Whether am I online? Are you able to hear me?
You're online and you're very much audible, sir.
Thank you. There is a power fluctuation. I thought there is some impact in my PCM.
No, sir, no, there's no issue.
Fine. Very good. Thank you. Sorry for this. Where material discrepancies identified has to be documented, how the same was treated in the books of accounts, what is the adjustment that was done, because under CARO we have also to report this particular material discrepancies, and its accounting treatment is also to be done by the audit, recorded by the auditor. Action taken for resolving such material discrepancies and adjustments in the books of accounts is also to be documented here. All these are all specific points relating to inventory to be documented as per SA 501. The next item that is discussed under 501 is litigations and claims, which is also interlinked with 143.3 of the Companies Act. Under auditor's report, under 143.3 reporting, the auditor has to disclose the first aspect. First and foremost aspect is disclosure of impact of pending litigations on its financial position. Because pending litigations, as on today, it may be pending, but its outcome may have a huge impact on the financials. Even at times, it may have an impact on the going concern of the entity. So now the responsibility of the auditor is to verify whether disclosure of impact of pending litigations on its financial positions has been made properly by the entity or not. This reporting is applicable to all the companies. You cannot conclude that this is applicable only to a listed company, this is applicable only to a public company, like that. It is applicable to all the companies, 143.3. So the auditor has to first of all get the list of items that are pending, litigations, legal items, and then how it is being dealt with. Even CARO, there is a responsibility with regard to disputed statutory dues, undisputed statutory dues, like that. With regard to statutory dues, they have an impact here. How the auditor may be aware about the litigations and claims or pending litigations of that particular company? The source can be of a P&L scrutiny, expenses, ledger scrutiny, or consultancy charges, legal expenses, advocate charges, like that, that may be debited into your P&L. That will be a very good source of information that to know about there is a litigation and what is the case, where even SA 250 can be applied with regard to laws that do have a direct effect, laws that do not have a direct effect on the finance statement, complaints of the same, non-complaints of the same, what could be the impact, like that. I may be in a position to evaluate based on SA 250 also. Discussions with the in-house legal department. In case of large corporate houses, they may have an in-house legal department here, where they have a legal team. They will update with MIS statements to the top level people also. I may have a discussion with the in-house legal team, or where there may be external legal counsels with whom I may also be in a position to have information here. Board minutes, committee minutes will be a very good source of information, because Every board meeting will be having a discussion about the litigations and claims, their proper approval, their proper action to be taken. Like that, they will be briefing this, and then that will be a very good source of information for the auditor to identify. So there are very many other means that are available to the auditor to get to know about the litigations and claims. But the point is how it is reflected in the financials. Obtain the direct information from the lawyer with regard to list of litigations and its outcome and its impact on the financials. Should I need to make a provision whether contingent liability is to be required or nothing to be done, like that I need to go for impact analysis which may have a materiality effect on the financial statements. Meet the lawyer in case of a significant risk or when there is a disagreement between the management and the lawyer. Management says we are going to win the case, sure. Lawyer says no, that's not as easy, it's a remote possibility. Then in that particular case, how to go about it? That particular lawyer can be treated as an external expert who is having technical knowledge in areas other than accounting or auditing, whose work has been used by the management in preparing the financials. And accordingly, I need to go for evaluating what is his opinion. Can I rely that particular opinion or not? Like that, I need to have a various discussion. Just as a matter of academic interest, just a minute. I'll just go with sharing my screen with one of an live audit report. Just a minute. I'll just show you one of a live audit report which is having a huge impact on the litigations and claims, just for academic purpose, not for any other pointing out or not for any other purpose. I take the latest available audit financial statements of one of a leading cement manufacturing company. Which is nothing but Ultratech. Just a minute. Yeah, I'm just sharing my screen.
Yes, sir. Visible, sir.
Yes, thank you. See, this is absolutely, I make a disclaimer just for the sake of understanding a live case study that we can go in for instead of theoretical perspective. I'm just using this particular published audited financial statements of this particular company, Ultratech. With all due regards, that the opinion has been given as a clean opinion here. Opinion paragraph has been given to the members of this particular company in their 173-page annual report. And it has a clean opinion, and they have also provided the basis of opinion. One of the first point that they need to go in for is, we conducted our audit in accordance with standards on auditing. So this is a declaration to be given by any auditor. Anyone who is going to report on the financial statement needs to necessarily give this particular disclosure that they have done the audit as per standards on auditing. So compliance of standards on auditing is mandatory and inevitable in this regard. So come back here. With regard to, they have also provided something like an emphasis of matter paragraph. As per SA 706, they have dealt with this. We draw attention to note number 33B of the standalone financial statement, which refers to the following matters. In terms of orders issued by Competition Commission of India against the company, including demerged cement division of Century Textiles and Industries Limited, which is a demerged entity, dated 31st August 2016, that is orders issued by Competition Commission of India, the CCI has imposed a penalty of 1449.51 crores. See the penalty value, there is a huge value of penalty of rupees 1449.51 crores. It is somewhere around 1500 crores of penalty that is levied on this particular company. So what's the impact on the financial statements? What's your takeaway about this particular imposition of penalty? How the company is dealing with this particular case? What for there is a penalty? For alleged contravention of the provision of Competition Act by the company, including demerged cement division. So there is an allegation that there was a contravention of the Competition Act, which is something about the monopoly in the transactions or cartelization with regard to other cement manufacturing players. There may be high pricing that may be influenced in this regard. So there was a allegation that there was a contravention of the Competition Act provisions, and the Competition Commission of India, which is the apex authority, has imposed a penalty of 1500 crores to the company. How the company is taking away this aspect? The company, including the demerged cement division, has filed an appeal against the CCI order before the Competition Appellate Tribunal. So there is an appellate tribunal, which was subsequently transferred to National Company Law Appellate Tribunal. In July 18, NCLT completed its hearing on matter and disallowed the appeal filed by the company. So my appeal is out now. The appellate tribunal has set aside that particular appeal in this regard. What happened in July 18? NCLT completed, agreed by the order of NCLT. The company has filed an appeal before the Honorable Supreme Court. So now there is a Honorable Supreme Court with whom the company has gone for an appeal, and it is the matter is pending with the Supreme Court here, which has granted a stay against the NCLT order on the condition that the company deposits 10% of the penalty amounting to 144.95 crores, which has been deposited. So what happens? There's a 1,500 crore of penalty that is given by Competition Commission. I have gone for an appeal, and then it goes for an appellate authority, and then it is merged with the NCLT appellate authority. In that particular case, appellate authority also appeals the decision. Now I am having a double confirmation that there is a possibility of outflow of penalty, and now I am going to Supreme Court. Supreme Court, what is, they have not heard, they have not concluded on that particular matter. Just to stay that particular demand, you pay a 10%, and then we will discuss like that, they told, and then now 10% has been paid and the matter is pending here. Now what is the position to be taken? Based on a competent legal opinion obtained by the company believes that it has a good case in this matter. So they feel, based on the competent legal opinion, they feel that they have a good case. Considering the uncertainty relating to the outcome of this matter, no provision has been considered in the books of account. Our opinion is not modified in respect of this matter. There is no provision that is made. They feel that they are going to win this case of 1,500 crores. And there is an expert legal opinion which says that we are going to win this particular case. Now the company also suggests that we are going to win the case. The auditor is also of the view that the company's stand is correct. They has not modified anything in this particular matter, but he feels that it's a fundamental aspect that requires the shareholders' attention, so he has put it under the emphasis of matter paragraph. We are not here to judge whether the company is right or not wrong and all, but the impact that I am trying to say here, where assuming that there is a negative outcome of this particular case in Supreme Court, and there is a 1,500 crores of outflow, how the company is going to manage, how it is going to be reflected in the financial statements and all, is $1 million question here. The point that I am driving here home is where you need to necessarily apply the provisions under standards, provisions under SA 501 here, especially read with 500 with regard to litigations and claims. This is one of a classic example in this particular regard. I go back to our discussion. I thought that I can make this particular matter so that we will have a live impact of this particular litigations and claims. In that particular case where there is a huge significant risk, or wherever there are disagreement, that the auditor may directly meet the lawyer, and then they may get a confirmation in this particular regard, obtain a management's representation also as per say 580, that the management is taking care of all these aspects, including possible outflow has been recorded in the books of accounts, accounting treatment is proper, like that, they need to go for it. Three important aspects to be looked into with regard to litigations and claims. The three matters are utmost priority to the auditor, not only in litigations and claims, but also in related party transactions. We need to vouch for three aspects. One is identification, the other one is accounting, and the third one is disclosure. How these matters are identified by the management, what systems in place to identify these matters, and to highlight these particular matters to the top level management and to have an accounting effect. Identification, and then accounting, how it is accounted, and disclosures of the same, how it is made, is it proper or not. I need to go for the basic systems and process to evaluate whether they are all properly done or not. In case of incomplete information, where in spite of repeated reminders, the management is not providing you the data, or you are not in a position to meet the lawyer, or you feel that there could be possibility of material misstatement in this particular regard because of litigations and claims, I need to go for a modified opinion only, may not be in a position to provide a clean opinion by the auditor here. With regard to SA 501. Now come back for the next essay, very simple essay, no conceptual discussion could be there in this regard. Very usual application of this particular essay, external confirmation. Essay 505 that talks about external confirmation here, where you have positive, you have negative and all. For the past 2 years, I heard positive is the most negative word. Now only we are slowly forgetting all these positive, this contamination, containment zone, this, that and all, vaccinations and all. We are slowly recovering that particular process and terms. even in SA 505, we have a term called positive as well as negative. What is this external confirmation is all about? What do you mean by positive way of confirmation and what do you mean by negative way of confirmation? As discussed in SA 505. External confirmation is nothing but an audit evidence that are obtained as a direct response to the auditor from a third party. It can be in a paper form or even in an electronic medium. Even mails communications are now permitted. But however, the secrecy protocol and the authenticity protocol as per Information Technology Act to be maintained by the auditor here. It may be involving a triangular transaction here where the management is involved in sending these confirmation letters as stipulated by the auditor, as selected by the auditor. And then the management will be communicating to the confirming party, and then the confirming party will be sending the direct confirmation to the auditor, and the auditor will be reconciling with the management. So there is a triangular tripart transaction that could be there involved with regard to a written response to the auditor from a third party, because one of the rule of relevance and reliability with regard to audit evidences obtained directly by the auditor are more reliable, and also external audit evidences are more reliable than internal. Like that, SA 500 stipulates certain rules. So here also the external confirmation will be very helpful for the auditor to conclude about the course of action and audit evidence here. Examples like bank balance, debtors, creditors, stocks or other assets held by third parties, etc. will be of very predominantly will be used by the auditor as an external confirmation. The bank balances procedure is not as similar to that of other debtors, creditors confirmation, where even usually it will be by way of a request letter for the management to the banker, and then banker provide a certificate directly, and then it can act as an audit evidence here. With regard to external confirmation, the two aspects are positive and negative confirmation. If the other party agrees it is positive, if the other party disagrees it is negative, like that we cannot jump into a simple conclusion here. Positive confirmation is a type of request that will be sent by the management based on the auditor's advice. Whether or not the numbers are matching, that the other party will be asked to respond, will be something called as positive confirmation. On the other hand, negative confirmation is a type of request letter that will be drafted by the management based on the suggestion given by the auditor, that the negative confirmation will be sent when the other party will be responding only if the numbers are not matching. If the numbers are matching, he will be keeping quiet. That will be deemed that it is matching. So it is something very risky for the auditor here with regard to negative confirmation. Response from a confirming party, whether they agree or disagree with the information requested, will be positive. Yes, sir, it agree. My books of accounts also shows 5 lakhs, like that they will confirm and then send it. Or no, my books of accounts shows only 4,50,000. You please reconcile, like that they may also send it. That is positive confirmation. On the other hand, negative confirmation will be only made by the confirming party only if the numbers are not matching. If the numbers are matching, he will keep quiet. It have an impact, like inaction by the other party may be treated as a compliance. So it provides a less persuasive evidence than that of a positive confirmation request here. There are nowadays, because of the technological advances, use of third party to coordinate and provide responses. Is it permitted or not? Say for example, I am sending a request letter to a banker. Banker in turn, instead of sending them, he asks the third party service provider to directly send it to the other parties. Will it be treated as an audit evidence because I am not obtaining from a banker, I am obtaining from an outsourced agent of a banker? Will it be permitted or not? Answer is yes, but you need to always maintain the secrecy protocol here. If a confirming party uses a third party to coordinate and provide responses to confirmation requests, the auditor may perform procedures to address the risk. There are risks involved in this particular transaction, like the response may not be from the proper source, a respondent may not be authorized to respond, and the integrity of the transmission may have been compromised. So considering all this, then only I may be in a position to place reliance on such confirmation requests. So it will be important for the auditor to evaluate whether can you rely on that, and then only you can place opinion accordingly here. On a different note, when the management by itself is requesting the auditor to skip an external confirmation process, in such a case, say for example, there may be a genuine case, sir, I am already having a litigation with that party. If you send a confirmation request, it will strain that particular relationship, negotiation and all. So please don't send a confirmation request to that party alone. Like that, when the management is making a request to skip the confirmation. Whether if it is reasonable or not, like that, I need to go and evaluate. If it is reasonable, yes, no problem, I may perform alternative audit procedure and then to come out of this. On the other hand, if the request from the management is not reasonable, say for example, none of the party, the management is sending the confirmation letters, then in that particular case, it will be treated as it will be considered possibility of material misstatement could be there. Consider the effect as per SA 260, which talks about difficulties faced by the auditor, and I need to modify my opinion as per SA 705 here, where I may even go for a qualified opinion. In a case to escape the responsibility, just like that, management will include one particular line item. Our auditors may suggest to include that particular line item. Debtors and creditors confirmations are subject to confirmation. Debtors and creditors balances are subject to confirmation. Like that, they will just simply put this particular term and then proceed further. So that if anyone asks, I have already given a note in the financial statement that it is subject to confirmation. That is actually a wrong way of disclosure. FRRB, Financial Reporting Review Board, has very rightly suggested that you cannot use the such terms. It is very vague in nature. What by the statement, what you are trying to communicate? Are you satisfied with the debtors creditors balance? Or just like that, you are bringing the fact that it is subject to confirmation, but what your opinion? What is your impact on it? Is it a material misstatement? Is it not a material misstatement? Have you convinced? Have you not convinced? You have not answered that. By merely putting that they are subject to confirmation or confirmation letters are awaited, then it doesn't serve the purpose of an audit. So you need to either qualify that particular report or you need to simply go. You cannot just like put that and then say I'm being protected like that. It is a wrong way of reporting. Even there are cases, there are qualified opinion that have been given in a case where the balances are not yet confirmed. Just a minute, I will also give you a live report in that particular regard, where in one of the listed entities published annual report accounts, where because of this particular fact that there was no confirmation, they have provided a qualified opinion. Just a minute. This is just a minute. I'll just all these examples that what we are taking as a case study is just for our academic purposes and not to quote anything in this particular regard. I feel that the screen is visible. To the members of this particular company, report on India's financial statements, qualified opinion. So there is a modification in the auditor's opinion that they have provided for. We have audited this particular company's India's financial statements, which comprise the balance sheet, the statement of P&L, and the dates and the notes on the financial statements. In our opinion, to the best of our information, according to the information given to us, except for the effect of the matters described for the basis of qualified vote, the standalone India's financial statements give the information required by the Act in the manner and give a true and fair view. Like that, they go for a qualified opinion. Why there is a qualification? What is the except for that particular matter? Which matter? It will be discussed in the basis of qualified opinion paragraph. That the company's trade receivables are subject to confirmation as of 31st March. Possible effects of the same on assets, liabilities, or profits, if any, is not ascertainable. So here, there is a trade receivable of the company which is subject to confirmation. Where there is no confirmation that we got as of now. Possible effects because of lack of confirmation that feels that there is no sufficient appropriate audit evidence. You may have an evidence, but it is not convincing to conclude that you have a reasonable assurance on that particular component of debtors or receivables. So in such a case, I am unable, since I am in the absence of sufficient appropriate audit evidence, I am not in a position to conclude its effect on the assets and liabilities and profits is not ascertainable. So I feel that there could be a possibility of material misstatement. When you can give a qualified opinion, there are two scenarios in which qualified opinion can be given. Unable to obtain, after obtaining sufficient appropriate audit evidence, the auditor concludes that there are possibilities of material misstatements, but that are not pervasive to the financial statements, he may go and provide a qualified opinion. Or in the second scenario, I am unable to obtain sufficient appropriate audit evidence, but still based on the judgment, the auditor concludes the possible effect of undetected misstatement could be material but not pervasive. He may also go in for a qualified opinion. Here, I don't have sufficient appropriate audit evidence for that particular component, but I feel based on my judgment, the possibility of the undetected misstatement could be material, but not pervasive. So I have gone for a qualified opinion. Like that, the auditor has qualified this particular report even for external confirmation. There is lack of confirmation provides the auditor to go even for a modified opinion. Is what the point that I thought you need to have a reference. So essays can be very rightly applied, and you may also have its impact on the audit of financial statements here. Something very important here. If not reasonable, consider the effect and even modify as per 705 exactly is what that we have seen now. The next essay is another wonderful essay which is recently revised, having a huge effect on your practical perspective. Essay 570, something about going concern. Very, very important and very, very significantly risk area, something about SA 570, going concern. As we all know, the moment we talk about going concern, immediately we feel that going concern is a fundamental accounting assumption, wherein consistency, accrual, going concern are all the fundamental accounting assumptions that the management has to keep in and need not disclose specifically. If there is some issue in this particular regard or that particular going concern is not valid, then it has to be disclosed like that. There are understandings so long. But after the revision of SA 501, SA 570, sorry, after the revision of SA 570, going concern is no longer an assumption. Very importantly, going concern is a basis of accounting. That's a major change that got made with regard to SA 570 is concerned. It is no longer a simple assumption. It is the basis of accounting. My entire basis of financial statement that I am preparing on this particular aspect is on the basis that it is a going concern. If that is not a going concern, the basis of accounting by itself will be different. It will not be on this particular basis. It will be on a different basis, maybe on an insolvency basis, maybe on a wind up mode that I need to go in for. Throwaway prices has to be captured. It is not this particular way in which I am going for accounting. Please understand going concern. Also, there are various reporting changes that got made because of the revision. We now have to be very carefully look into this particular aspect in any company while finalizing. Definitely, I need to have an audit documentation to this particular effect to comply with SA 570. After COVID, this assumes more impactful because as on 25th of February 2020, nobody thought that there is something called as COVID that I am going to lock down for these many years. It's going to affect my regular day-to-day affairs like that. We never thought. Suddenly there is an outbreak. Suddenly there is a pandemic. Everybody was shrinked into, and then entire operations got affected. Economic impact would be there. Lot of companies have been shut down. Lot of companies, because they don't have sustainability to go in for it, because they don't have operations at all. They were not in a position to honor the commitments. There are import-export transactions got affected. No transportation, no labor, like that. You had a huge impact. Economic environment got changed, and the basis of accounting also got changed. The entire industry's perspective got changed. Before COVID, after COVID, like that, you have two different era that was started. So the effect of going concern, especially after COVID, we need to be very careful in analyzing. The impact was also considered to be important. Let us go for SA 570. What does it talk about? What do you mean by going concern? And whose responsibility is to go for evaluating going concern? There is also an effect of SA 570 on CARO reporting. Even CARO 2020, there is one big question that they have asked, and then the responsibility is shifted to the auditor now. Thank God, parallelly, there is also an amendment in Schedule 3 to disclose that particular effect, but the impact on the auditor is also high. What do you mean by this particular going concern? What is the effect that we are talking about? Under the going concern basis of accounting, as I told you, under the going concern basis of accounting, the financial statements are prepared on the assumption that the entity is a going concern and will continue to do its operation for at least for a foreseeable future. That is for a minimum period of 12 months time. The company is neither having an intention nor necessity to shut down your operations. It's something about going concern. As of now, I don't have any intention nor necessity to shut down my operations. at least for a foreseeable future, for a minimum period of 12 months, I will be continuing my operations is what the basis on which you are preparing the financial statement. Who is responsible for assuming this particular basis? It is the responsibility of the management to go for it. And it is the auditor's responsibility to believe that the company is entitled to be a going concern. But the point is, I need to also consider something called as a blockage, something called as a blocking cloud. What is this particular blocking cloud that we are talking about? Is something about a material uncertainty. Another important relevant term which is having a huge impact, material uncertainty. What is the objective of SA 570? To obtain sufficient appropriate audit evidence regarding, and not only regarding, but also to conclude the appropriateness of the management's use of going concern base of accounting in the preparation and presentation of financial statements. It is the responsibility of the management. Even Companies Act section 134(5) that talks about director's responsibility statement. There is a specific exploration that have to made that they are going concern. They need to make a disclosure in this particular regard that they are preparing this particular financial statements on the going concern basis of accounting here, and they feel based on these following factors, the going concern validity is not affected, like that management has to substantiate. Here also, from the auditor's perspective, I need to validate whatever the management's assessment with regard to going concern. The assumptions that are being made by the management that it is a going concern has to be validated, and the blockage cloud that so far that I have told, to conclude based on the audit evidence obtained whether a material uncertainty exists. If exists, whether it really affects the going concern. It exists, but it doesn't affect the going concern. Like that, I need to go and evaluate the impact of this particular material uncertainty, which is nothing but an event or a condition that may cause significant doubt on the entity's ability to continue as a going concern. So I need to go and evaluate management's intentions, management's assessment. I need to also independently evaluate whether material uncertainty is there, its impact on the going concern, and accordingly, I need to report as per this particular essay. Very interestingly, my SA 700 series or reporting series, 700, 701, 705, 706, 720, all are reporting related aspects. 570 also is incidentally included for reporting because the way of reporting if going concern is impacted, how it is to be done, the way in which material uncertainty is there, how it is to be reported, and all is discussed under SA 570 only. Material uncertainty. What is this material uncertainty? Very, very important term. You may not have a direct effect in the normal course. We need to be very careful in understanding this particular term, material uncertainty, because of its feature. The feature is material uncertainty means, it's a means definition, the uncertainties relating to events or conditions which may cause significant doubt on the entity's ability to continue as a going concern, that should be disclosed. Very, very important is that particular fact. There may be conditions or events that may cause significant doubt, but I may go away, but I may proceed further. But the point here is it has to be disclosed in the financial statement. If it is not disclosed, then that itself will become a material misstatement. Because sometime back we have seen that intentional omission of disclosures, wherever there are disclosures that are required to be made, if it is not made, will be treated as a material misstatement. Here also, when there are material uncertainties existing, if it is not disclosed in the financial statement, no way the auditor can give a clean opinion. The auditor has to go for a modified opinion only. I'm just cautioning my dear professional colleagues here to please understand whether there are material uncertainties while doing an audit. Is it properly disclosed? If it is there, if material uncertainty is there in the financial statement, then your way of reporting by itself will be different here. We need to be very careful. SA 570 read along with the implementation guide that is issued by WASB is a wonderful piece of resource material that could be available to understand this particular course of events about SA 570 here. What do you mean by it is also termed as significant uncertainty, also colloquially called as significant uncertainty, but technically we always call it as a material uncertainty. In Indian scenario, it is called as material uncertainty only. What could be treated as a material uncertainty? There are certain indicators that may affect the going concern basis of accounting here. The indicators or parameters are divided into financial parameters, non-financial parameters, operational parameters, regulatory parameter. Like that, you may have different spectrum in this particular regard, like fixed term borrowings approaching maturity without realistic prospectus to repay will be treated as material uncertainty. I don't have realistic prospectus to repay, but there is a fixed term borrowing that I have to repay. If I don't repay, then there will be a problem to the company on its continuity, ability to continue as a going concern. But I may have alternatives. This is the moment there is a material uncertainty, that itself is not a basis for your going concern is lost. Like that, I cannot conclude. It is only a red flag. There may be mitigating mechanism that can be taken up, alternative sources that can be made by the entity to still continue as a going concern to avoid this particular material uncertainty that could also be there. The auditor is necessarily to evaluate whether such material uncertainty is there, whether mitigating mechanism is there, whether it is really affecting the going concern or not, should be evaluated and documented here. Say, for example, fixed term borrowings approaching maturity without realistic prospectus to repay, adverse key financial ratios. There are financial ratios that are in adverse, in negative, which itself is an indicator that the company is not working financially right. Like excessive reliance on short-term borrowings to finance long-term assets. Even Caro reporting, there was a Caro 2020, whether short-term funds has been used for long-term purposes, end use of borrowings, whether the money which has been raised, whether term loans that has been raised, whether it is used for the particular purposes or not. Like that, there are financial prudence can also be a impact that could create a material uncertainty here. Whether funds raised on short-term basis have been utilized for long-term purposes. If yes, the nature and the amount to be indicated as per Caro here. Or there can be a substantial operating loss for the company. It's not mere profit loss that I am talking about. There is a substantial, huge operating loss which could affect my net worth got eroded. Like that, it may affect my going concern, could be treated as a material uncertainty, or inability to pay creditors on the due dates, which may cause insolvency proceedings against the company here, which may be a financial parameter for me, working capital crunch, or loss of a major market, my other parameter like major tender I lost, or major market I lost, or technological advancement that I have not updated. So the user, the customer pattern got changed, I lost a major market. Your Nokia was a very good example. Originally, nobody thought that Nokia will be out of India here. Everybody thought Nokia, because it got a synonym for a mobile phone. The moment you think of a mobile phone, you think of Nokia. That when it got introduced, when it got popularized. Suddenly, the swipe technology, the numbers that swiping and the screen touch screen model was introduced by Samsung. Nokia have not updated, or Nokia thought that Indian mobile users will still be with them because of their usage, but they went wrong. It was a complete shift Android, and then complete shift to the other mobile markets, and a lot of other players got into role. There is a loss of a major market, especially a potential market got lost. Going concern is obviously lost for any such company here. Or other factors like shortages of key raw material. I'm solely relying on this particular raw material, but I don't have it because of various factors. Then I don't have production. I may not be in a position to continue. I may not be in a position to keep up the contractual obligations here. Or a huge labor turnover or labor unrest. Exactly, all these has happened in COVID. Shortage of key raw material was happened in COVID, and a huge labor turnover, where you can see that labor migration was a very great problem that we faced in the first phase of COVID. But they went back, and then I don't have skilled labor. I don't have trained people to perform this particular activity, which affected the company's operations. Pending legal proceedings and claims from which could be substantial. As of now, it is pending. The moment there is a case adverse against the company, then it may be something substantial. 1,500 crores of penalty that is to be paid off. The company may not have that particular withstanding capacity to continue as a going concern. It may be lost. Non-compliance of a law or a regulation may have an impact. Your Tamil Nadu Vedanta Sterling could be a very simple example, where there may be a pollution control issue. There may be stating that there is a non-compliance. The government may pass an order against the company from running that particular company. Like that, there are indicators. All these are all material uncertainties which could affect, or even change in the law or a regulation. Changes in law or regulation by the government. Suddenly government bans a particular product. Tomorrow onwards, no more tobacco related products. Like that, when the government comes out with some regulations, no more plastic usage, like that, those particular industries which are solely depending on that particular product and material will be hugely affected, will be having an impact on the going concern. Being an auditor, I need to evaluate, understand the entity and its environment, including its internal control, including the future plans of the entity, the regulatory environment with which it operates. Like that, various parameters has to be assessed by the auditor to evaluate whether really the entity is a going concern or not, whether it's having an effect on SA 570 or not. Like that, we need to go for a evaluation here. Extended reporting under the management's responsibility paragraph under the auditor's reporters. This section will include the following new aspects. Under the management's responsibility paragraph, I will include an additional paragraph here. Management's responsibilities for assessing the entity's ability to continue as a going concern and whether the use of going concern base of accounting is appropriate, as well as disclosing matters relating to going concern. Like that, it is the responsibility of the management. Like that, I will incorporate in my audit report under SA 700. There is also a reporting change, very important reporting change that got made. Previously, if going concern is got affected or impacted, there may be an emphasis of matter paragraph that could be included as per SA 706. But now, after the revision of SA 570, your emphasis of matter can no longer be used in this regard. You need to include a separate paragraph called material uncertainty relating to going concern. Like that, you need to go for a separate reporting. Instead of the earlier requirement to report material uncertainties with an emphasis of matter paragraph, reporting of material uncertainty is now required to be made within a separate section of auditor's report titled as material uncertainty relating to a going concern. What is this? Just to have a effect again, just a minute, I will once again show you another audit report so that we have practical perspective how they go for reporting here as a case study and not for any other purposes. Just a minute, I will go for a live 21-22 recent annual report of Reliance Power, wherein you may have an effect of this particular 570 clearly. Just a minute. Yeah, I'm going for the independent auditor's report to the members of Reliance Power Limited, opinion paragraph, and it's a basis of opinion paragraph. And this is what the new paragraph that we are talking about, material uncertainty relating to going concern. What is it that they have included? We draw attention to note number 23, 26, 27 of the standalone financial statements, wherein the company has incurred losses during the year. Its loan have fallen due for repayments, and the loans which have been fallen due of subsidy companies for which the company is a guarantor. So there is a exactly whatever the parameters that we have seen, you are seeing it here, where there is a huge substantial operating loss. There is a material liability that is to be paid for, but the company doesn't have the prospectus aspect to repay it. Its current liabilities exceeds current assets, indicate that material uncertainty exists. Exactly the same term that is to be used. Material uncertainty exists that may cause a significant doubt on the entity's ability to continue as a going concern. However, for the reasons more fully displayed in the aforesaid note, that is in note number 23, 26, 27, the standalone financial statements of the company have been prepared on a going concern basis. Our opinion is not modified in respect of this matter. So the moment I give this particular information to the shareholders, immediately they are awake, they are alert, they are cautioned, and then you will be automatically supposed to go for reading that particular 23, 26, 27. What's the problem? How the company is going to manage it? Where the company has stated that it is still a going concern entity. In spite of all this material uncertainty, how you are going to mitigate that particular risk? Exactly, these are all to be reported by the auditor as well as by the management in this regard. As we have discussed, material uncertainty is a matter that is to be disclosed in the financial statement. Now they have rightly reported here. If I don't disclose this, sir, it doesn't have an effect. I'm going to mitigate. I'm going to make new funds. So you don't disclose this at all. Like that, if they say so, it will be treated as a restriction in the scope of audit. It will be a problem for the auditor. I need to necessarily report that particular fact. So this is even CARO reporting. This particular aspect is there, material uncertainty. please have a very careful look at this particular clause to be reported by the auditor. On the basis of financial ratios, aging and expected dates of realization of financial assets and payment of financial liabilities, other information accompanying the financial statements, the auditor's knowledge of the board of directors and management plans. Based on all this, whether the auditor is of the opinion that no material uncertainty exists as on the date of audit, the company is capable of meeting its liabilities as and when they fall due within a period of 1 year from the date of balance sheet. So it is a question to the auditor, dear auditor, do you feel, is there a material uncertainty that the company may not be in a position to pay their liabilities which are going to fall within a period of 1 year's time? Based on various data that you have, are you in a position to comfortably say whether the company is in a position to pay or the company is not in a position to pay? Like that, the responsibility is now shifted to the auditor even under CARO. Apart from 570, here also, but here the particular aspect of verification is limited only towards that particular liabilities. But under SA 570, we need to go for material uncertainty relating to the entire entity as a whole here. There is a huge change that got made in going concern reporting, even audit opinion paragraph, where material uncertainty is existing, adequately disclosures have been made by the management, it doesn't affect the going concern. Then what I have to do? Even then, you need to include a paragraph called material uncertainty relating to going concern in the auditor's report. Exactly whatever that we have seen 2 minutes back. On the other hand, material uncertainty existing, no impact on the going concern, but it is inadequately disclosed by the management, then inadequate disclosures of that particular material item which is to be disclosed by itself will be treated as a misstatement in the financial statement. It can be even be treated as a material misstatement in the financial statement. Non-disclosure of material uncertainty will be automatically resulting in a modified opinion only. The auditor has to issue a qualified or adverse opinion only. I don't have any other option. Disclose the fact of inadequate disclosures. On the other hand, when going concern basis of accounting by itself is lost, going concern is lost, but I feel that the company has prepared the financial statements on the going concern basis, I don't have any other option except to provide for an adverse opinion. I cannot go and disclaim an opinion. I cannot go and give a qualified opinion. I cannot go and give a clean opinion. I need to go and provide an adverse opinion only, stating that financial statements do not reflect true and fair view. This is a very important aspect to be documented and then to be kept in as a part of SA 570. Beautiful disclosures can be made, discussion can be made, but still within a period of 2 hours time, this is what the maximum that we can be in a position to conclude here. With regard to 580, which is a very simple essay that talks about written representations to be obtained, even 570's impact will be there in this particular essay. Confirmation from the management in support of other evidence. So whatever the other audit evidence that you have obtained, in support of the same, you need to get obtaining a management's representation in this particular regard will be treated as a written representation. The written representation, whatever we are talking about from an external party, will not be covered under 580. Only from those from the management that we are obtaining will be considered as per SA 580 here. It is to be obtained from an appropriate level of management, maybe by the CEO or CFO or audit committee or from the board. You need to go and obtain this particular management's representation at the fag end of the audit. At the initial beginning of the audit, I will be going for SA 210. That is nothing but agreeing the terms of audit engagements, and then there will be an engagement letter. And at the end of the audit, I will be going for management's representation. Both are mandatory. It is not optional. Both are mandatory that the auditor has to consider and then to go for it. What are all the cases where MR to be obtained? On all material financial information to be obtained, that the responsibility of the management to be obtained, to reconfirm adequate controls are in place with regard to test of controls, the compliance procedures are also to be obtained, and general representation with regard to the preparation of financial statement, fair presentation of financial statement, design, implementation, maintenance of internal controls, including financial controls over financial statements with reference to financial statements, the detection of frauds, the ensuring that the financial statements are free from material misstatements, considering the financial statement as a whole, compliances of all applicable laws and regulations with regard to the entity, compliance of applicable financial reporting framework with regard to the fair presentation of the financial statements, all are the responsibilities of the management, including evaluating the appropriateness of the validity of the going concern basis of accounting, or to be obtained as a part of management's representation here. Responsibility for preparation, provision of all information explanations, all the transactions have been recorded, nothing got omitted, like that. All information explanations are provided to the auditor, like that. I need to go and get a representation by including all this. In other representations, like specific aspects like accounting policies, appropriate accounting policies and estimates are reasonable, assumptions are justifiable, like that, I need to get a representation also. And status of pending litigations, related party transactions, or all the specific areas where we will be going and getting a representation also. End use of borrowings of that particular money, where I may be utilization of CSR funds. All these are all the areas, each and every component I need to get a representation, including data where they are treated as good and recoverable, like that. I may be in a position to go and get a representation from the management here. Again, management's representation alone cannot be acting as an audit evidence. It will be a corroborative audit evidence in support of other available audit evidences here. Whenever there are inconsistencies between management's representation and other evidence, you have other evidence which is something else, and management representation says everything is fine, then it is something a conflict between one audit evidence and the other. As per SA 500, I need to resolve the conflict by extending my audit procedures. On the other hand, if the management's representation is not reliable, just like that they give whatever you want, they give, or if it is not provided, or there are conflict between the other audit evidence and the management's representation, then it can even be involved in a management fraud, re-evaluate the integrity of the management, consider its effect on the auditor's report, and even if required, if it is so material and pervasive, even consider from withdrawing of the engagement is also possible here. Also, when MR is completely provided on all respects, that doesn't automatically result in a clean report, not possible here. MR is also not a substitute for other audit evidence. MR needs to be provided for the audit period before audit report date. It's not after the audit report that I am getting this particular MR. Usually MR is to be prepared and sent by the management, but we don't advocate that. Let us, the auditor, prepare this particular management representation so that nothing is omitted in this particular regard, and then you may be in a position to have a comfortable compliance of various aspects that is expected to be obtained here. And the last essay that we are into is audit documentation. Very many documentation perspective that I have already discussed in the respective areas itself. Audit documentation provides evidence that audit complies with essays, that the auditor has complied with standards on auditing. So very, very important base perspective is documentation. Without documentation, I may not be in a position to substantiate that I have taken reasonable care and caution, that I have performed my audit as per standards on auditing here. There are certain specific aspects that I would like to go for because of the paucity of time. I would like to go for important aspect with regard to SA 230. The core aspect of SA 230 is why this particular documentation is prepared is because to prove the two aspects. One is there is a sufficient appropriate audit evidence has been obtained by the auditor, and not only that, it is acting as an audit evidence that it was planned and performed in accordance with standards on auditing and legal and regulatory requirement. Very importantly, these are all the two important aspects that I need to prove that I have audit evidence. I have also conducted my audit in accordance with standards on auditing. Both are proven through this particular documentation, SA 230. My audit file, also called as working papers, can also be in a storage media, even in a physical or in an electronic form, which is permitted. SQC1, SA 230, SA 500, all permits even in an electronic mode of storage of your data, but it has to be retained. Three core aspects that are discussed in SA 230. One is the time with which you need to prepare your documentation. The time with which you need to prepare documentation is not after the audit, but parallelly along with the audit, where you need to prepare the audit documentation before the audit report is finalized. Very, very important. Your audit report finalization shall be absolutely based on the audit documentation that is available, the audit evidences that you have obtained for, because it may enhance the quality, it facilitates effective review, documentation prepared after the audit is likely to be less accurate. It is a very important fact that is to be told to our audit staff, that you complete the audit and then sit for 1 week and then do the documentation should not be the factor. As and when you do the audit, you just spare half an hour, 1 hour to compile the documentation. That's what a right way of approach. The second and important requirement of SA 230 is something called as experienced auditor criteria. Usually people forget about this particular aspect, but it is very clearly stated in SA 230. It is to, my documentation has to enable the experienced auditor criteria. What do you mean by that experienced auditor criteria? With my audit files, my working files and documentation, if I provide to an experienced auditor who is not involved directly in this particular audit, but is having knowledge about the audit and audit process and requirements, should be in a position to evaluate and understand that you have planned and performed the audit in accordance with standards on auditing. When that particular experienced auditor criteria is met, that means you are preparing the audit documentation in the way in which it is prepared. I should not go and ask, where is this paper? On what basis you have concluded? What is the documentation? What is the audit evidence? Nothing. Right from the beginning till the conclusion, till the provision of audit opinion, my documentation should speak on its own, should enable the experienced auditor criteria, is the second requirement of SA 230. And one another third requirement of SA 230, just a minute. The third important requirement of SA 230 is, I'll come back for it, assembly of final audit file. When it has to be, final audit file has to be assembled. The documentation has to be prepared as and when I do the audit, but the assembly of the final audit, there is a timeline. Within a period of, shall not be more than 60 days after the date of auditor's report is what the time that is given for me to consolidate, that is as per SQC 1 and as per SA 230. My audit documentation files are to be retained by the auditor for a minimum period of 7 years from the date of the auditor's report. So at the 128 of the Companies Act, it talks about 8 years to be retained by the companies for their records. From the auditor's perspective, the audit working papers are to be maintained for 7 years in this particular regard. There are also certain relaxations that is provided for smaller entities. Discussion with the management, communication with the engagement team and all need not be documented like that. There are relaxations that is provided for small and medium enterprises here. That's it with regard to SA 230 is also concerned, where in a period of 2 hours time, 6 essays is something really a massive one to conclude, because each essay is having its own intricacies. There are a lot of aspects, deliberations that can be made. So with the time factor that is available, we are just creating an interest out of these particular standards. There are being a professionals who are practicing and chartered accountants, you can very much grasp whatever that is given in the standards, and then you may be in a position to do. There are beautiful material that is also provided by WASB, like checklists, like illustrative materials, and also implementation guides and all provided by it. So you may be very much make use of it. And thanks everyone for your patient listening and motivation. And my special thanks to Sundarajan sir for coming over here and making the introduction. And all the office bearers of the Institute of Chartered Accountants of India for making this evening a wonderful in spite of your busy schedule.
Yes. Thank you so much for excellent presentations in a short time. You covered,
thank you,
as you said, very nicely. And so there is one question. I'm sharing my screen. Hope it is visible.
Yeah. Private limited company shareholders are in dilemma to wind up the company or to convert company into LLP. Okay, considering the cost of compliance of company. SA 570 going concern impact? Definitely yes, because it's not going to be continued as a going concern from the company's perspective. They may be converted into an LLP. The dilemma by itself will be a very good indicator for the auditor that they don't have a concrete management plans to continue at least for a foreseeable future. So that may be the intention of the management to be documented specifically. They need to take a concrete stand, and then they need to prepare the financials accordingly. If they prepare on the basis of going concern, then modified opinion has to be provided by the auditor as stipulated in SA 570.
Sir, and if there is any question that comes up to SIRCP mail ID, we'll share it when time permits. You can respond the same, sir. And as of
Definitely.
now, yes, we hope the presentation will be shared with us so that it can be circulated with the participants as a PDF file along with the recordings as we usually do. And Sundaran sir unable to join the session at the for vote of thanks. So, and on behalf of him and office bearers
from
and
Selva and
yes, sir.
vote of thanks from Selva, who is the back end of the entire virtual meetings, is happy.
And thank you for a continuous support, sir, for us as SIRC for past. As per my knowledge, you have been continuously supporting us on any topics that we need to, and you have done without any hesitation.
Yes,
sir. Thank you so much for time, sir. We look forward to have you in future for physical session in Brahmaya Hall anytime soon, sir. Thank you so much, sir.
Thank you. Thank you.